Good morning, welcome to Morning Outlook. This is Kim speaking on Monday the 8th of January. So, where to with these markets today? Well, let's firstly look at last week. We saw, if I can get this coming up properly, it's on this screen so it doesn't help. We saw last week the US data coming out, the jobs coming out better than expected, but then at 3 o'clock we saw the services PMI falling more than expected. It's much lower than expected, so some mixed old numbers sort of released, and consequently we saw the sort of whipsaw. Now it's all down to the probability of interest rate cuts, etc., that we're looking at this week. Let's just look at today. Let's go this week a little. If I can click on here, it's not playing at the moment. There we go. So if we click on this week, and we'll see that we don't have a lot of data out until Thursday, and then we've got the inflation data out in proper. Now it's expected that this is still heading down towards the 2% target. They see themselves pretty much in line with that, so it sort of takes the heat off of interest rates needing to be quite so hot. The figures on Friday showed that at one stage the chances of an interest rate cut had been cut to about 55%. Now it's back up to about 60%. It's a bit like a yo-yo at the moment, which is best described in this hourly picture of the euro. It's got quite like a yo-yo. As we've seen, the news came out, non-farms came out a lot better than expected, which can be inflationary, only to see the services data coming in a bit later there, and it was certainly softer, and we saw continuation. So mixed numbers basically. Let's have a look at this from a daily point of view then. So starting off looking at the euro dollar here. Now I haven't got anything immediately setting up this morning, but we could start seeing this. Well, we're looking for signs early this week of a break from these. At the moment you can see the euro spent the last 4 days pretty much sideways overall. Yes, it's had some volatility within it, but it's not massive. Friday was the biggest day in terms of catching the sort of bigger moves there, but for the majority of last week it was pretty slack there. Looking at the end of the week, and looking where we're sitting at the moment on the hourlies, you could say it's almost flatlining, or we're just waiting for the next bit of movement, next bit of volatility. Which way though? Well, it's been pointing to the downside, and I do wonder if we'll sort of get a break of the lows here. Around about 109.29, that sort of area. If it starts folding over this morning, but it's a bit wait and see, a bit early at the moment effectively to see which way these markets are sort of buying or selling. And I'd be more tempted to look and take guidance nearer 9 o'clock than 8 o'clock today, based on what we're seeing at this stage. Just looking at the pound. The pound's done pretty much the same picture. It's running through the same sort of picture, same sort of consolidation phase here. Bit more whippy on the dailies. Weekly picture on the 4-hourly time frame, coming down to the 60-minute time frame. You've got slightly higher lows kicking through here. Is it going to catch a little bit more? It's just that little bit more bullish looking at this stage. Lack of clarity really sits there for me at the moment. The pound yen, this was looking a bit softer a short while ago. I'm looking at it now. It's looking like it might. This 4-hourly bar looking like it's trying to turn around again, and I mean, the trend you would say here, ignore this green bar, forget what it's doing there, but just look at what's happening. It started working its way in this short term here to the downside, but the bigger scoop is really still there to the upside, with a stronger US dollar potentially coming through. and that's what I'm sort of looking at. So markets that have failed last week pretty well was the likes of the Aussie and the New Zealand, more so. I'm just looking for these for some movements this morning. So at the moment, it had its sort of chop last week there on Friday, just like everything else. But again, really just waiting to see if we get a break. This is a bit more of a trend to the downside. Yes, it's danced around here, but looking to see if we can get a break of these lows here again at 66.93. I prefer this really to the euro at the moment. The euro is just too choppy. The New Zealand dollar is doing a similar. There we go, similar picture, little bit better in my book, a little bit cleaner. It's already down towards its pivot, so maybe post 8 o'clock looking for the break to the downside here, see if we can get a continuation towards its daily S1. That's, I say, one of my favourites this morning at this stage. Quick look at the US dollar CAD. It's a bit inverted, of course, because this is a dollar CAD. Similar picture. In fact, it looks slightly weaker in a sense. The US dollar's already pushing above the pivot here, whereas the others are still waiting to see if they break the lows or whatever else. And this is struggling. Well, I say struggling, it's just that bit weaker, and we could get a push up there as well. So mixed old results on Friday from what actually happened with the data that was coming out there, not really helping things too much. Okay, so yeah, favourite at the moment, the Aussie and the New Zealand. Other currencies like my typical favourites, like the Euro CAD, which we get some lovely trends on generally. It's still in this horrible chop zone at this stage, and it's not from a weekly point of view. It's several weeks at this sort of level, so I'll just stay out of it. So there's quite a few I'm staying out of at the moment. Now, if you want to continue looking at the currencies with me this morning, I am running the trading room live. I've put a link on the bottom of this YouTube video. If you're watching on YouTube, you'll get the link elsewhere as well. Just come and join me. I'll run through the other currencies later. For now, though, that's the main currencies. Just for those that are more focused on gold, oil, and the indices. Let's look at gold first, if I can find it. There we are. Okay, so gold dropping off on the dailies here at the moment. It's a bit of a whipsaw day on gold as well. I can imagine with a lot of these markets, and I mean gold being no exception, as traders saw that move to the downside there would have been a lot of people jumping aboard and selling, only for it to get a very quick and solid loss there. Yeah, you just got to be so careful with these non-farms, etc., and the data that's coming out at the moment. It's very fickle, and as I say, just as fickle on gold at the moment. Last week as a whole, it really just it did come off, but it's range boundy. It looks a bit softer this morning at this moment. If we start seeing a stronger dollar as we rise through the day, a little bit more, expect this to come off. We've still got that yearly pivot sitting below there untouched, and I think that may yet be a target. Oil, what a whippy old day on Friday. Again, pushed up on Friday in the end. More solidish day. We come down to the hourlies. There we go. Pushed up there a little bit. Well, actually, it's 2 o'clock. Sorry, that's the 2 o'clock, 1 o'clock, 2 o'clock bars pushing up. Just never went anywhere. Got to remember that I think we're in a bit more on oil in the general. We're in a bit more of a consolidation phase at this stage, and I don't expect it to do a great deal. That's the famous last words. Looking at the US markets, the S&Ps. Well, Friday again, whipsaw all day. Flew down first. Then there was the potential and the change back to lower interest rates expected quicker in March, but then that sort of faded off as we ended the day there, and it's just looking to me more on the softer side. The overall pattern, okay, I'm only looking over a few days here, but the overall pattern here looks soft at this stage, so we could see more to the downside. Other markets, morning Dean, other markets looking pretty similar in terms of the softness there. The Dow Jones, if I can find them, yeah, where are you? There you are. If I can find the Nasdaq, again, still looking quite soft here. Now, whether the US gets a soft landing or whatever, I think the interest rates are, well, there's so much in focus at the moment, and a cut in March will still, well, there was pricing in so many cuts last year. Now it seems to be slowing down. We could yet see the dollar strengthen some more, and these equity markets coming off further. Right, that's it for me this morning. I wish you a great day's trading, and I'll catch you in the trading room if you come join us. Otherwise, I'll catch you in the morning. Bye for now.